Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of Friday, the 17th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.subset.com. It's published on YouTube after a delay of 24 hours. Right, I want to show you just start off with an interesting chart from February. Now, this is just for February 2020. And this is for context. At the end of January, I don't remember the start of the pandemic, but at the end of January, I remember talking to my brother on, I think, about the 28th of January, and the World Health Organization had just basically said they weren't imposing a flight ban. We were talking about why they hadn't imposed it, and I was suggesting that maybe they thought it was too late, and the pandemic was already too late to stop. The thing is, I'd been kind of expecting the pandemic all my life. I'd read about them, and many pandemics in the past in my fairly wide reading, and I'd kind of been expecting it all my life and thought really it had taken quite a lot longer to happen than I'd expected. But that was basically the end of January. Yeah, look at when we made the all-time high. It made the all-time high about the 20th of February. It's at this stage, the pandemic was loose, it was coming, and we were still making all-time highs. Why? Because people were thinking it might not happen. Really, just as simple as that. And there you can see it forms my topping pattern, and then obviously we by March we are down here. So the thing is, does the market always look ahead with perfect vision? Far from it. And that I think is an illustration of where we are now. Now, have we got a pandemic here? No. Do we have an inevitable, pretty much major problem happening here? No. But we do have a very significant one that may be forming here. But I'll come to this more. I'll talk about this more as we get into the bigger picture charts. But in terms of is the market assessing the real risk of what's happening in the Iran war correctly at the moment? And the answer is no. What we've got, though, and I've been doing an awful lot of I've been reading and looking at a lot of videos, but I think the situation we've got here right now is this. Obviously, the US accepted the Iranian 10 points, which would in effect have been a surrender. They had talks in which they effectively rejected the 10 points again. Now, the Iranians still want their 10 points. The Americans basically want their 15 points plan. They both still want the others to surrender. And what is happening now is the US is trying to blockade Iranian oil, cut off its money, and force it into a situation where it may have to shut down production for a while. And it's actually shutting down production is easy. Setting it up again can take a while. So if the US can force Iran to the point where all of their storage of oil is full, which they could probably do in 3 or 4 weeks if they have an effective blockade, then potentially they could force the Iranians to submit, although that wouldn't necessarily make them submit. Where the Iranians are is they've been talking yesterday about, they're saying they're going to start shutting down the Strait of Hormuz, the Bab al-Mandab Strait, which would mean basically the other strait, which is the one that goes to the Suez Canal, and a lot of oil has been diverted through, would close down. So, and that, of course, would cause a major supply shock and potentially could cause a massive economic crisis. Now, can they close it down? Probably yes. Could the Americans close it down? Yes, but that's kind of not the point. I mean, the Americans can close down the either strait, but the problem is to do so would be to basically say you're not going to cause a massive economic crisis for us. We're going to cause the economic crisis. There's no benefit to it. What the Americans really need, what the world needs, is both straits open and oil flowing. Otherwise, there will be a large energy shock. So that's where we are, and maybe the Americans will win out on that. But I think that is far from a foregone conclusion. So we will see how it develops over the next few days. Personally, I think the Iranians have a better position, although I think the Americans have the crazier leader. So I think obviously having a crazy leader means that you don't respond to incentives in the way that you normally would, and that can be an advantage if the other side knows you're crazy, which I think they do. So we'll see how that develops, but that's where we are on the war. But in the event that both straits got closed for any significant period, then we're talking about a major economic shock for the world. And in that situation, we're not likely to see prospering stock markets. In the meantime, though, Trump is saying, oh, the war will be over within days and the Iranians are desperate for a deal. They're not desperate for a deal, and they've not been forced to the table yet. And they might be. But there's no particular reason to think that they will be. In the meantime, we've seen a hell of a move up. We have made pretty much all the targets. We made the IHS target on ES. We have made the IHS target on NQ. We've made the double bottom target on RTY. And we are now, in the process, we're now making the double bottom targets on YM. We didn't have really any upside targets on DAX and the STX, but on Nikkei, we've now made the target. Now that my charts, daily charts have caught up, you will see that we've now made the a new all-time high on the Nikkei. What I'm still looking for here, and obviously this is a very promising start to get it, is I'm looking for the retest of the all-time high on IWM, and it looks like we're going to see that at the open today. In the meantime, we've got some negative divergence here, but it looks as though it might be run over. We've got a possible 60-minute sell signal brewing here on ES. We've got a 60-minute sell signal fixed on NQ. We've got weak 60-minute sell signal fixed on IWM. We'll find out in 9 minutes whether these have all failed or some of them have failed, and they may well do. Now we've got a weak 6-minute sell signal fixed on YM. At the moment, it looks as though we're going to lose the YM one, we're going to lose the RTY one, we may well lose the ES one. And at the moment, the NQ one looks as though it'll survive the open, but of course could die soon afterwards. We've been seeing a very, very, very strong move up, and apparently this is the fastest recovery from a 10% decline since 1928, which is pretty impressive. Does it actually mean the market's still going to be up in 3 weeks? No, it doesn't. So we'll see how that goes. All right, let's have a look at the bigger picture charts. Okay, looking at SPX, obviously we're on a daily upper band ride. We've now done 1, 2, 3, 4, 5, 6. We're on the 6th day, I think. Or yesterday was the 6th day. Do we have any negative divergence here? No. And really, for negative divergence, I'd be looking for a pullback and a retest. We have not seen that pullback yet. You can see the pullback would ideally get us back to the 70 level on the RSI 5. In terms of the hourly chart, we've got a weak RSI 5 sell signal fixed here. I'm not reading too much into it. I'm not seeing much sign that we're seeing an immediate turn. And obviously, we're up currently 50 at the time of writing, mainly on optimistic talk from the US administration, which is not based on a great deal as far as I can see. All right, looking at Qs, obviously, we're on a daily upper band ride there too. No meaningful divergence. We've got a little RSI 5 sell signal fixed there too on the Qs. 15-minute, we've got an RSI 14 sell signal fixed, but effectively we are trending up for the time being. Looking at Dia, I'm not expecting a high retest here. We might get one, possibly, depending on how far this goes. But actually, I've got a pretty decent looking head and shoulders. And it's the other three I'm really looking for a retest of the high on. We've got a possible weak RSI 5 sell signal brewing. This has been the weakest on the way up and is the only one where I've got really meaningful divergence. We've also got the original RSI 14 sell signal, has not yet failed there. Again, we've got an RSI 14 sell signal fixed on the 15-minute. All right, let's have a look at this for IWM. Now, IWM, what I want to see here is a full retest of this high here, and we are very, very close to that, and it looks as though we're going to get that at the open today. That is the last of the high retests, the other one being Nikkei, and we made that high retest yesterday. So this sets up a whole series of double tops. They aren't necessarily going to play out, but they're there, and they might well play out. So, and if the war goes badly, they probably are going to play out. So we've got an RSI 14 sell signal fixed here on the hourly. What I really would like to see is some daily sell signals, and we've got no meaningful divergence here. Only on the RSI 2, which isn't really sufficiently meaningful, but I'm thinking we could see a retracement, get back to the 70 level, retest the high, and that could give us some really nice sell signals. Looking at DAX, we have not probably looking at a high retest here. I've drawn in a potential which would be valid head and shoulders, although it's not particularly pretty. So we will see how that develops. But really, overall, what we've done here is set up a lot of double tops here, which is, of course, what we were doing. It was setting up some big topping patterns in 2020 as the pandemic crisis was happening, and then when everything turned to shit, they all played out. And I'm thinking we may well see the same thing here. Right, in the meantime, DX is still thinking about whether it's going to make this double top target in the 96.76 to 96.99 range. Kind of looks like an overall bull flag forming. Looking at the other currencies, not a lot to see. We're pretty close to the IHS target in the 1.1875 area on the euro, and I think it's got a decent chance of making that full target. Not seeing anything really on USD, on GBP USD, USD JPY and USD CAD could well be flags, although this is getting a little leap for a flag here on USD CAD. Australian dollar, possible double top here. NZ, not really seeing a lot. All right, looking at ZB. We have a potential inverted head shoulders here, which I am watching. I'm not expecting that to make a target, really. It might be that we could get a spike up, though, if the Americans can actually successfully resolve the Iran war. I'm skeptical about that happening, but it could happen. I don't know what's happening in Iran. If there is a hidden weakness that really isn't obvious at the moment in the Iranians, which will force them to the table and force them to concede because they have to, then fine. Otherwise, I think the ones who would look as though it looks like Trump's got the weaker negotiating position, and really, I don't think he's rational. I think one of his biggest motivation, really, in terms of the war here, is he wants to have a resolution which looks as though he's not losing, and he's not going to be rational about the position he's actually in. So we will see. That's not a great position to be in. I mean, there is actually an advantage with an enemy perceiving you as being crazy and irrational, because maybe they will give you more to get what they want rather than they otherwise would. But it's a limited advantage, and mainly it's a disadvantage. Right, in terms of oil, oil's going sideways to down at the moment. We've actually seen CL go down to 85. Now, this is really almost zero risk premium, because after this is concluded, you'd pretty much expect that for the next 6 months or so, we'd be operating at a 20%, $20 a barrel risk premium to where oil was before, and pretty much we came from about 65. So we're there now. This is too low, and I don't think there's any rational reason why oil is down here. We will see how this goes. But my lean is we're unlikely to get below 80 or significantly below 80. At the moment, we are still seeing we've seen significant damage to actual oil infrastructure that will take years to repair. The Strait of Hormuz is still closed to most traffic. Trade through it is a small fraction of what it was. There's no rational reason for oil to be down here. HO is down too. RBOB is not significantly down, which is interesting. NG, this looks like, in terms of a pattern here, this looks like a falling wedge. This is a bearish underthrow. I might need to play around with, I might be able to get a better support trend line here, but the bottom line is this is us breaking over this nice wedge resistance trend line, and I'm wondering whether this is bottoming for a rally. It could be forming an IHS, but I'm thinking we might see a retest of this low or a possible right shoulder form, and then a modest rally which could get us up, potentially up into about the 2.85 area. We will see how it goes, but I'm watching for a rally here. I think we're probably going to see one. In terms of GC, I'm still wondering whether the IHS is going to make the target in the 51.11 area. There are reasons to think that we might retest the low here. I think it is far from definite, and we could see a break up instead. Obviously, on the bigger picture, we've got big bull flags. The one on gold is a huge flag, and it's going to be a while before we need to go up a while further before we broke up from it. But it is a beautiful bull flag, and we've got a very nice one on a couple of the others, particularly silver. What I'm concerned about is we might see a retest of the low. Not seeing an awful lot of evidence for that on the gold chart, but that's not a bad-looking potential bear flag on silver, so I'm watching it with interest. Palladium could again be a bear flag. Platinum could again be a bear flag. Encouraging to see them up this morning. I would like them to not deliver a retest and to go straight up. HG, I've widened out the chart here. This is the all-time high here. So the question is, are we going to consolidate here and go up? It kind of looks like a bull flag forming, leaning towards seeing a retest this high here in the 615 area, and we may well see a move up to retest this high, which could set up a very nice looking large double top. All right, looking at the other commodities, KC still looks like a bear flag forming. SB leaning towards seeing a retest of this low. When we do see that, that could easily be, I think, on the bigger picture, a second low of a double bottom to go higher, and we will see how that goes. I've got slightly mixed feelings about sugar here because we do have this bigger picture target down in the 9 area. It could be that we would continue into that downtrend. CC, we had a nice looking triangle here, which then broke up into a perfect bear flag channel. As long as that bear flag channel lasts, then I'm leaning towards this ultimately breaking down into a retest of this low here in about the 28-25 area, and that's the way that this should go. We shall see. CT has broken higher. Bigger picture, we've got a large double bottom that has broken up on lumber. Lumber, I'm wondering about this just resuming the downtrend. 60-minute buy signal has reached the possible near miss target on wheat. Wheat, we've got an IHS which has broken up with a target in the 619 area, and it's almost made that target. It needs to get through the monthly pivot, but I think chances of it making that full target, potentially just extending higher, aren't bad. Bigger picture, I'm thinking that we might be seeing over the next few months large moves ups on cotton, on wheat, on corn, and on soy. And I've been talking about these on the bigger picture charts. On corn, could be forming an IHS here to go higher, leaning towards the upside there. We've still got a weak 6-minute sell signal fixed. That's not reached the possible near miss target yet. On soy, we have a possible IHS right shoulder forming, and we'll see how that goes. On ZL, we've got what should be a consolidation before a move up, if I'm right about overall direction on the others. Live cattle, we had a flag, we can retest the high, we have continued higher. And lean hogs, I think we're deciding whether or not this is a flag. If this is a large bull flag, which I'm leaning towards it being, but at the moment it hasn't stopped on the downside. If it continues down long enough, then this isn't a flag. So we shall see. All right, now as the hour has just passed, let's see how we did with the patterns, and we still have a possible 60-minute sell signal brewing on ES. We still have a 60-minute sell signal on NQ. We have lost the weak 60-minute sell signal on RTY, and we've lost the one on YM as well. So I wouldn't be astonished if we lost the others today as well, but the main thing I wanted to see today was YM going higher and making the double bottom target here. It looks like we'll make that on the RTH chart out the open, and that is the last of the bottoming patterns I posted last week, and that will have made target. So we'll see how it goes. All right, great. In that case, let's have a quick look at questions. No questions? In that case, I think that's a wrap. Everyone have a wonderful weekend. And if I don't see you at the bigger picture, I'll see you again on Monday. All right, cheers.